Hey, good morning, everybody, and welcome to TheoTRADE Chat. It's Don Kaufman here. It's April 26th. I had to think about that for a second. April 26th, 2024. Spoos up some 31 handles. I have to tell you right off the bat here as I kind of kick it off this morning, I am a little bit surprised the spoos are actually up as much as they are after that PCE data. So you can see I'm looking at the bonds, obviously, to begin with. I've been looking at the bonds all morning. I'm a little bit surprised. I am a little bit taken back by that one. So one of the things you have to recognize coming in this morning, see, now maybe this is making more sense. The PCE data, it came in hot. I mean, it's basically the worst thing you can see for the market. But I get it because Google and Microsoft are out. It is holding a bid to the marketplace. But you're starting to look around in here, and in the financials, for instance, unreadable because there's like no size. But they should open a little bit lower. Stuff like Nvidia, it's got a bid under it because it's AI mania. Tesla's down a little bit. Meta is basically flat. Obviously, Google has a bid under it. Amazon has a bid under it. Apple's flat. It's a mixed bag this morning. Obviously Microsoft again, right higher to where it should be, but fading a little bit in here. And I say fading because it's been fading all morning long. After yesterday, I mean, Microsoft's basically going to be unchanged. We'll talk about that. So we're coming into the cash open here, and the advanced decline line, it's going to be good. The ticks, they look okay. The energy sector is actually off. That's ExxonMobil and Chevron that have earnings, but let's come to the bell here and let this thing kind of play out a little bit. We'll talk about it as we get into today's. All right out of the gates. Advanced decline line, largely negative to mixed out of the gate. There's of no surprise there. Again, you have basically the heavyweights of tech that are pulling this marketplace around. I just can't stress to you enough. I would have anticipated this to back off more. That PCE data was almost like a nail in the coffin for inflationary pressures. The question is inflation abating? The answer came this morning. The answer is no, it is not. Every indicator that we've looked at in the last few months has indicated inflation is still, I wouldn't say rampant, but it's coming back to some degree. I mean, these are upticks. This is not, flat. It's not that it's not going away. They're upticks. Whoops. I hit my own mute button. Crap happens, man. Crap happens. I was trying to look at something over here on the other screen, hit a mute button. Dogs and cats living together. Take a look at the ticks this morning. They're negative. The advanced decline line's picking up a little bit. But before you get all kinds of crazy, can you have a marketplace that's down when you have Google up some 16 and change? Although seeing some sell side here early on. Moreover, Microsoft, a little bit of sell side. There's no significant movement in tech other than those that have earnings. Now, you would probably say, well, Nvidia right now is riding, okay, higher, but pretty much off the fuel of AI mania to some degree. Nevertheless, okay, the S&P is being up 23 is curious. By the way, the last couple of trading sessions talk about some volatility. I like this stuff. It's up, it's down. It is so up that it's down. But if you look at the week and you bring up the SPX, okay, what's the most notable aspect of it is you realize that all of this crap just happened. We're right back to where we were on Tuesday. I mean, to the penny where we were on Tuesday. Just to explain that, where were we on Tuesday? Okay, we're exactly where we are now. That's Tuesday. We actually came up. We're the exact same spot. We're at the upper edge of the expected move. And that, people, is why I think that this is so, I wouldn't say baffling to me, but pretty critical spot in the marketplace, right? We're pulling in to the upper edge of the expected move. And as we actually do just this, the highest probabilities, we just kind of ebb and flow today around this. But again, what I see in the tape is something drastically different. There's a lot of volatility in this tape, a lot. Okay. I mean, would you have thought that the NASDAQ could only be up 0.6%? I'm serious. 0.6% with these kinds of moves. I mean, Google's up 10%. And it's the impact to the NASDAQ at this particular time is nominal. And that's because it's to some degree starting to be offset with some other aspects that are falling in and around it. Tesla competing, maybe giving up a couple of points here again. Anyway, NVIDIA is going to be an interesting one, in my opinion, to watch today, because you already know that Google, okay, is kind of stabilizing, if you will, in and around the $16 range. Speaking of Google, Google had about a $10 expected move. It's decisively outside the $10 expected move. I think that that's a great thing to start with today. The reason it's such a great thing to start with today is that Google's $10 move could be instrumental if we started to see some broader sell side activity in the marketplace, which evidently we're not seeing right now. But it's something to think about, because Google, if it starts to slip just a little bit further, I mean a little bit further, gets down to like 171, okay, all of a sudden it can get pushed, only be up $10, and it might change the way you feel about those S&Ps on the trading session. I mean, the market today belongs to Google. Now, again, you're going to bring up, NVIDIA. NVIDIA can be a critical, I guess it's a critical underlying in respect to the fact that if it does catch a bid, it's enough that it's actually going to push the NASDAQ considerably higher. Speaking of considerably higher, the NASDAQ has just shot by 60 handles. I mean, I was just saying 2 minutes ago, literally 2 minutes ago, I can't believe this thing was only up 0.6%. Talk about that did not age well. That did not age well. I'm still surprised it's only up 0.9%. That might not age well either. The point being, NVIDIA, just a mild bid from here will really push the marketplace into a much higher gear. Nevertheless, the market today literally belongs to big tech. It's the only thing really to look at. I mean, you've got energy on your screen, which is down about 1%. Energy should be down. There was big earnings, ExxonMobil and Chevron. They're not down dramatically, but I think they were down in the pre-market, okay, which these days means not a whole hell of a lot, but you can see ExxonMobil, okay, taking a little bit of a hit here in the pre-market. I don't think they even have Chevron on there. That's okay. Nothing making outsized moves other than some big tech. So I was bringing up Google because I think Google is going to be a fun one to watch. In let's see the power of the expected move over here. So you move $16, you're supposed to move $10. What, not just an implication. I mean, I'm telling you right now, if this thing pulls back just a little bit more, okay, the probability of then shifting into high gear and getting driven, okay, back, another $6 is high. So this is where you go back to yesterday. And again, I'm going to show you why that I think that this is such an important kind of just conceptual thing here. You go back to yesterday, there's basically a $10 expected move on a $150 stock, right? $156 stock. So you get this $156 stock. If it goes up $10 or down $10. So again, I'm just trying to plot out, where's it supposed to be? Well, 156 plus 10 is pretty clean. It's supposed to be a $166 stock this morning. Okay. Is it? Absolutely not. Okay. It's trading like 172. So right now, we are still effectively, okay, outside of what would have been expected. Now, would it be crazy to see this thing come into 166? No, but that would definitely damage those NASDAQ futures to a significant degree. And that is something that, maybe it settles in over here. Now, there's a flip side to this. So bear with me, because right now what you have is Google kind of waffling back and forth between what we would term a 1 sigma move, which is 166, okay, and a full-blown 2 sigma move, which starts to come in even $10 higher. It's literally waffling back and forth. Okay. You cannot discount the ability for the 2 sigma move. All I'm saying right here, it's extraordinarily close to stuck between kind of the rock and the hard place. What we have looked at with extensive research and data, okay, is there's a really high probability of it hitting one or the other in the trading session. So that's what makes Google so, it's paramount today that, this is like the 1 sigma move. This is like the 2 sigma move. We are leaning a little bit closer. It's supposed to be a sigma. We're leaning a little bit closer to 2. Okay. But again, let these S&Ps kind of settle in a little bit, and we'll see how this thing plays. You're $3 away from actually hitting that 2 sigma move, which it did in fact jump to a 2 sigma move in overnight trade. My assumption though this morning is it's so stuck right between the rock and the hard place. It's got to get below like 171 and it'll get pulled back, and we'll see how this one actually plays. Back over to Meta has a little bit of a bid under it. Okay, I'm actually surprised by this also. I'm surprised by it because, yesterday nobody loved me, but Meta does have a little bit of a bid back under it. And as you now you're starting to see most of the tech stocks, okay, rally and ramp up a little bit. Let's talk about Microsoft for a second. Microsoft, the expected move in here was $22. Okay, pretty shocking because it's half of that. However, yesterday had some significant volatility. Microsoft got hammered, okay, before its earnings because of Meta, jumped right back to where it was the previous day. I think the best way to probably look at Microsoft right now is to look at the auto expected moves and check this out, because we were riding at the upper edge of the expected move. We dipped all the way to the lower edge of an expected move, only to see us back at the upper edge of the expected move. People, that's some freaking volatility in that product, but it was all priced in. To see it move $10, again, Microsoft was actually expected to move as much as 22. There's a lot of, it's very ambiguous right now because we have 2 major products, both Microsoft and Google, that are not doing as expected. And as a trader, like, you have to look at this and it's not to justify anything. It's quite the opposite. I'm not sitting here justifying, well, the S&P should be doing this, they should be doing this. It makes the entire trading session incredibly ambiguous because there's so much room for movement in Microsoft and Google today. There's so much room. Like Microsoft, if it starts to sell off, and I'll just give you an example, it starts to sell off, like, holy crap, where does it stop? I mean, could it be down $22 in a day? The answer is yes. It's that kind of chaos, though, that makes this tape, it's dangerous. It's definitely dangerous. I'm going to tell you another reason it's dangerous here in just a moment. But again, Google stuck between kind of the rock and the hard place, and Microsoft, it's out in the middle of nowhere. This thing is just, it is out there right now. It's not adhering to any specific statistical levels. And to me, what resonates the most is that is going to be a very dangerous stock throughout the course of the day. I'm not trying to diminish NVIDIA's role. NVIDIA is likely to do whatever the hell like Microsoft and would do. That would be my my interpretation of it, is that if you start seeing sell side activity in Microsoft, it's probably going to pull NVIDIA down pretty good. Again, those AI stocks ultimately trading a little bit together, but this is your decisive and movement of the day. Like, it's pretty evident that nothing else matters today. You can talk about financials all you want. Look, we have positions in financials. Yay, it's up 10%, but that's not going to be a market mover right now. It can definitely add some weight to the marketplace, but what matters today is tech and tech alone. Even the energy sector, which is down 1%. Okay, is it having a broader impact? No, it's maybe a little bit of drag to the S&Ps, but nothing. You got nothing on that particular front. And of course, as you look down the list, some of the usual suspects, I'm actually surprised some of the banks are actually bid high, bid up a little bit today. Um, there's one other thing that really resonates with me. Okay, for today's trading session, we're all looking at the same marketplace. Did the market go higher? Yes. Okay. Did the market have a pretty good rip your face off rally? Okay. Kind of. Kind of. I mean, yesterday was an incredible rally back, but let's not forget at one point yesterday, the S&Ps were down 70 handles. Okay. They recovered. They recovered when the market closed. They were down like, 16 or 18. And then all of a sudden the earnings come out and they jumped. And that's where we are right now. But the most interesting thing, the most interesting player in the room is probably volatility this week. So volatility reverts back, but it has not budged. Okay. Volatility has not budged since early this week. I mean, that's Tuesday. Volatility has not budged. And which means, yes, we're right back to where we were on Tuesday. Let's talk about price action versus volatility. We are right back to where we are on Tuesday, but the volatility still does not trust this marketplace as far as you can throw it. Okay. I know that we're outside the expected move. I recognize not only are we outside the expected move, okay, I recognize we're in the same place we were on Tuesday, but I also recognize, okay, that the marketplace, the volatility will not subside. Okay. And you sit there and you kind of ask yourself, well, why isn't volatility subsiding? Because volatility is not, okay, trusting some of the moves that you're seeing on the screen. It's the only like answer that we can really come up with. If volatility was like, oh, we're comfortable, we're going to be okay, vol subsides in here, and we're simply not seeing that kind of volatility come off. Now, clearly, there's a Fed announcement next week. We just got PCE data. It's not to say that volatility cannot drop more today. There's still a most definitely, okay, an uneasy feel to the marketplace. By the way, we didn't even talk about like Intel. It's getting pummeled. Intel is getting pummeled. Okay, just I kind of goes by the wayside, like when you've got a marketplace moving as wild as this. So Intel, they don't like that one. Okay, this is one we've looked at kind of week in and week out for opportunities in here. Okay, I think that it broke all, okay, semblance of support and resistance. You got to look at it now on 25 level or not at all. Like look at this. You have to pull up like max charts to see. It's actually the most substantial down move that has been seen. When I say in recent history, we're talking over a decade. You have to look back to see the kind of price action that you're seeing right now. You have to look back, okay, to financial crisis and maybe back here and, sorry, apologize. This is not financial crisis. This was internet boom and bust. This was actually the bottom of it. Even in terms of financial crisis, you're in this neighborhood over here. Okay. That's how wild the move is in Intel right now. So a little perspective. Okay. You have, would you call this a mega market cap? Well, let's go look. All right. Not anymore. $131 billion company. It's not even having an impact anymore to the marketplace. The only reason I'm bringing it up, that move in Intel, it's concerning because it's old tech that's having one of the most horrendous moves seen, okay, in its entire history. That's, again, it's kind of interesting on that front. Really interesting, actually, to me, because I haven't looked at it on a monthly like this in forever. All right, back over here. S&Ps at this point are just holding their own. So the ticks have actually turned positive, okay? The ticks have turned positive in here. I am very surprised to see the Russell running. I would expect the Russell should actually pull back. Why? Because the Russell is filled with energy and it's filled with financials, kind of regional financials. So that's going to be worth noting. The Russell, though, it still has some tech in it, and it's possibly enough to keep it running. But well, we'll see how far it runs and if there's going to be an opportunity. I'm just pointing out there could be an intraday opportunity specific to the Russell in here as it runs a little bit higher. All right, back over once again to Google. So I'm jumping back to Google because, again, it is right where we were talking about this kind of inflection point to where it could snap and pull back to a one standard deviation move. Moreover, Microsoft, some highly volatile trade in there early on. I mean, it's already traded from a range of basically 113 to 113, 413 to 406. There's just not enough coffee in the world by Friday. Yeah, I have to tell you, frustration of trading sessions like this. I mean, a real frustration for me, frustration of a lot of trading sessions, but the real frustration to me of a trading session like this is you are literally hostage to underlyings. I just showed you like Intel getting the living crap beaten out of it. Nobody even cares. It's not even on your radar screen. When I say it's getting the crap beat out of it too, it's $4 move. Okay, look at the expected move yesterday. It's like 260. Okay, this is full blown like horrendous puking your guts out kind of move. It hit just shy of a it did basically just shy of a full blown 2 sigma move. This is a really big move in Intel, and no one cares. It's not again. It's not even on anybody's radar screen right now. It should be, but everything pales in comparison to mega market caps. In fact, my frustration specifically this morning, and it's okay to be frustrated with the tape, okay, especially when you're being held hostage by Microsoft and like Google. Don't do it to me, Google. Anyway, the PCE data came out this morning. For those of you that are not familiar with PCE data, okay, whatever, okay, personal income, yada yada yada. So here's the fun thing. I am very much a purist in looking at the tape on a day-to-day basis. Like I don't really like to look at news. I'll read the crap because I'm on here. Like I'm very, very forthright in saying this, okay? And that's if I didn't come on TheoTRADE live, I probably wouldn't even look at the PCE data. I'm sure I would read it at some point, like later in the afternoon, like, oh, okay. But because I know I'm going to be on here, I look at it. Right. I know that that's kind of a messed up thing, but it is what it is. Like that's how, like I'm totally purist about, I would rather look here. Okay. You want information? It's in the tape. Who the hell cares about the PCE data that came out? And I'm going to tell you exactly why. What today was the PCE data? It came out hot. Doesn't that imply that inflation is not per se under control? Yes. So what did the market do? Rallied. And then it faded, but then it rallied. Okay. The market often has made up its mind, okay, before that data comes out. And we don't know what that making up its mind means, but the data that comes out it doesn't even matter anymore. And I hope you guys realize that because this morning, all the media and every damn story, okay, and we even had Brandon and Blake talking about it this morning, which is fine. Like it's but all of it is for nothing because the price action didn't play out like people anticipated it would. Okay, that's it. It's just the price action doesn't mirror or even have the same rhythm or feel as what that data was. The data came in hot inflation. Okay, you would think, oh, it's still my heart. Okay, the market now is looking at this and go, inflation's hot. The whole world is hot. I like hot, and now loves it. I mean, you can paint this any way you want to paint it. Even the US dollar, didn't react the way you would think it did. Initially, knee-jerk reaction, the dollar sold off, and then it ripped. It's just crazy out there, man. It's crazy. And then gold also, gold rallied and then backed off. Every move, and am I wrong in saying this? But for those of you that are, into price action and yet you read news, do you not agree that every move, if I told you yesterday the PCE data was going to come in hot, every move that you would have made would have been the exact wrong one. Am I right? Think about it for a second, because it just goes back into the idea of financial media is all for nothing. None of that crap matters anymore, because that is not what trade even is. Like, trade doesn't, uh, it has no bearing, okay, and no footing in there. Meaning, when I say that, I'm going to pull up the CME tool. I'm trying to type here at the same time, but there's no bearing to anything other than maybe some earnings that excite it and yada yada yada. By the way, this is probabilities for the next meeting. The Fed is apparently not going to cut rates in May. Now remember, 3 months ago, 3 months ago, okay, there was a 100% chance, basically 100% chance that we were cutting rates. I'm not kidding. There was like a 3% chance that we were not going to cut rates. There was over a 70% chance that we were going to cut in March. So we clearly didn't cut in March. Newsflash, March already happened. We're definitely not cutting in May. If you look to June, July, okay, July, that's interesting. It's still a 66%. Go out to September. September is the first time that they're starting to price in the idea of a cut. Okay. This marketplace, just telling you, it has not learned. The highest probability by the end of the year, okay, is that one cut might take place. That's just based on Fed fund futures right now. By the way, this is not like a probability based on people going, I think. It's not voting. Okay. This is real. When I say it's real. Like, this is the marketplace. Speaking of a marketplace, let's also be aware that we have our very favorite numbers coming up. Apologize. That's next week. Okay. Next week. Anyway, we have our very favorite numbers. The children from the University of Michigan will be announcing something at 7 a.m. So make sure, okay, that you are prepared for the possibility of more chaos today. I'm just creating another alarm. I know it's only 5 minutes away. So you have 5 minutes to another major data point comes out. I personally don't think that that's a major data point, but as I was saying, I'm very much like a purist when it comes to trade lately. I don't care, okay, what data is coming out, but you better believe I know that data is coming out, right? That's the important concept to kind of latch onto over here. Anyway, with that being said, so sorry, I'm cruising around again here. S&Ps have got a strong bid under them. This could get actually really, really wild, and I'm going to show you exactly why. So you have S&Ps with a strong bid under them. We are really like full blown starting to break off the upper edge of the expected move. The only thing that could bring us back now would be this catalyst coming in 4 minutes. Okay, we are in effect. Okay, this number down here, and this is what's important, as well as those tech stocks today. That number down there, just so everybody can see it on the screen. Okay, it's 5063. Okay, and the reason I'm bringing it up again and again and again, this is the number to watch today, 5063. It's pretty high probability, for being here or slightly under. Right now, we have, okay, officially broken off this upper edge of the expected move. When data comes out, you can get very, very wild. This is volatile trade because we're outside an expected move. One thing I've talked about pretty extensively in the past, okay, it's been a while since I've actually detailed this. All trade that happens outside the one standard deviation, okay, is often considerably more volatile. Does it mean we're going to stay up here? Not necessarily so. Okay, this is right here, right now. This is the highest point we've been throughout the course of this week. Bigger picture, though, okay, bigger picture. This is where people go, it's a 50% retracement. Okay, not quite, but not too far off from it. So we had some pretty serious damage inflicted over the last 3 weeks to the S&Ps, more so to the Nasdaq. The Nasdaq has actually had a nice little recovery. Okay, spiders have also recovered. So the question at this point, the only question moving forward, do you break back down, okay, or do you continue to rally? It's a fair question. Okay. This in every instance, okay, in every instance of some sell side activity that we've seen recently, which has been very, very minimal, we've rallied back up. This looks a lot different. Look, we just went through again 5 months of rallying. So there's been like, hiccups in here for like a day. That's by far and away the most significant pullback. Okay. The one thing I want to give you a quick heads up on, this is not about Don being bullish or bearish. Okay. You know what my positions happen to be. They are bearish. What you need to recognize though right now is yes, we've bid back. Fair enough. But volatility does not trust. Okay. At least the day is young. So volatility could collapse. If volatility collapses a little bit more, the chances of us continuing to rally increase. Okay. So vol, though, right at this moment, it's crazy to see this. You have the VIX and the vol futures. They have not backed off really an inch today. SPOOs are up almost 50 points. That is really obscure. And that's the kind of stuff that here comes your announcement. Okay, that's the kind of stuff that I try to bring to everybody's attention. That's the kind of stuff that really matters, right? Because you're sitting here and you're making decisions based on what you think markets are going to do, which is fine. Okay. There's things that you can think and it's fine. You want to try to handicap what this marketplace is going to look like. We just got through some big hurdles this week, really big hurdles this week. So we'll see what this next hurdle is going to be. Who cares about the consumer, sentiment survey? But consumer sentiment isn't good. You have inflation. Okay. You would think that's going to be bad. Again, stop trying to rationalize anything. Order flow is order flow. That's the point I always try to make. Order flow is order flow. Don't rationalize anything. Volatility should be lower. But after this survey comes out, maybe volatility will go down. Right now, the market, you have to understand, it says one thing right now: be on your game, be on guard. That's the best read you can get on this marketplace, okay, at this moment in time. So what is it like? They didn't even the students that be, they're like, oh man, are we late with this? Like nothing's happening. Okay. Did somebody forget to do it? Okay. No real movement on the consumer sentiment survey. At least nothing detectable at this point. Okay. Oh, this is good because nobody actually cares. So finally, it's weak. That's weak. It's a little bit weaker than expected. A little bit weaker than expected. So pretty nominal. All right. Pretty nominal across the board. Some of it's kind of in line, probably why it's fairly mundane. All right. Just taking a quick glance around. Let's go look at some individual positions. Again, the Google, look how close we are right now. Okay. Can you hear the sucking sound? This, as crazy as it sounds, there's a trade in here. Okay. In Google, as Google starts to come down, the trade is to buy like here. Let's do it just for the hell of it. You don't have to do it, but I'll do it just for the hell of it because it'll be like a crazy, it's a crazy flyer trade. What I just did, I bought a put. You go, oh, okay. Why'd you buy a put? I bought a put on the outside chance that Google pulls back to the edge of its expected move. It's literally halfway home. You go, why didn't you buy the put here? Because up here, the chances of it pulling back to the expected move were greatly diminished. Now that it even crosses under like 172, that's a pretty good threshold. Like I'm more comfortable. But, okay, can it get all the way back to 166? That looks like a far cry. It doesn't matter what I think. Okay, can it get there? Of course it can get there, right? That's, neither here nor there. Of course it can get there. But I'm wearing my best pajamas today. Okay. But for me, it is worth the trade because the risk reward in this thing would be phenomenal. There is an entire class based on this very, very logic. Okay. It's a very simple logic over here. That's much better. Sorry, I can't sit down anymore. I gotta move, people. I gotta move. There's stuff going on. So there's a class based on this very simple logic. It's like a post earnings class. Brian! again. Brian's supposed to actually post a link in here because I have no idea what the hell the name of the class was anymore. Okay. It's the after earnings trade. It actually is a class that almost killed Independent Don. It really did. So anyway, it had to do with standard deviations in earnings. And we did so much freaking research on this. I have a buddy that I, hadn't talked to in like a long, long time. And this is the class that we started like working together a little bit on. And it all came down to the whole entire of the class is that if you're stuck between two standard deviations, what's the probability of actually reverting back down to one of them? And the answer was really freaking high. So if we were to get all the way to 166, I mean, I just bought the 170 puts. Okay, I bought the 170 puts, and here, I mean, I don't mind posting this in here. Bought the 170 puts in Google. This trade expires today. I paid 60 cents for them. And look, I know that they're trading 80 cents, but if the trade works, okay, there could be $4 of intrinsic value. They're like, the stock has to back off a lot, people. And you're looking at the marketplace, and you're like, well, the market's bullish, Don. You're totally nuts. Okay. Look, the market's bullish because Google says it's bullish. The market's bullish because Nvidia, okay, is going on a tear. The market's bullish because, one of the biggest market caps is still up 2%. The other big market cap is up 10%. But Google, all right, to me, being almost 2 deviations this morning and pulling back, we'll see. Trading earnings formula. That's it. And again, I don't mind if I take a full 60-cent hit on here. I want to be clear about that. I'm not going to be here and, crying in my soup over this. You wouldn't want to risk 60 cents to make $4. Okay. Is it highly probable? No. By the way, it's trading at 60 cents again right now. Is it highly probable? No. Okay. But it's definitely worth trading. It's definitely worth trading because volatility in Google has actually pulled back a little bit. And we'll see how that one actually goes. By the way, they're never an easy ride. All you do is basically buy it for 60 cents, close your eyes, put on the blinders, and see how that works. Okay. I like it. Nvidia. Okay. Let's ask the question, what the hell is going on in this stock? Everybody hated it. Okay. Like last week. Now, okay, we're back. Mortimer, we're back. Full blown, like 2.5 deviation move to the downside. It is now almost a full deviation, 2 deviation move to the upside. Forget about what you think. It's statistically speaking, making some pretty phenomenal moves. The question is, okay, once again, what's driving trade? Let's go look. What is driving trade? So I knew before even opening this up, the number of calls being traded at the ask or above is going to be phenomenally high. Of course, I knew that because the only thing driving trade lately has been call buyers. So this is call buyers gone wild. You can clearly see the call sizzle. So what's interesting is the trade, okay, that brought us higher was call buying. Some of that trade has largely abated in the past couple of months. Okay, it does seem right now like it's trying to make a comeback. Before you take this too far, we have seen the attempts at to buy calls and drive markets again, time and time again. It has also failed significantly in the last 3 weeks. I stress to you again. So here we are on a Friday. Okay, we're coming into the close of what has been a really volatile week. Okay, look, I know that the week is higher. Like, I got it. Like, look, I know the week is higher, and we're higher right now by just ballpark about 120 points, right? So we started basically at 49.70. Okay, and here we are roughly at 50.93. So 120. What's 120, 130 points amongst friends? Okay, so I get it. We're higher, but it's been a wild, wild week with some big pullbacks. How we close this week, to me, it's important. It's really important. We close to the upper and outside the expected move. Okay, if we close outside that expected move, it's just displaying how almost unruly the market's getting. You got 1 week that we're outside. You got another week outside. The market's kind of getting ripped apart at the seams, having a difficult time kind of handicapping forward risk. Okay, there haven't been that many significant breaches of expected move this year. But when you start to see consecutive breaches of expected move, okay, it tells a little bit of a story. The other aspect that would really resonate with me today, okay, can big tech hold it together? Can big tech hold it together today? And of course, everybody's going to say, well, yeah, of course, big tech is going to hold it together. Really? Because Google holding it together is Google with a 2 sigma move, pulling back to what it was expected, okay, is, going to be critically important moving forward. Moreover, yeah, we have Apple coming out next week, and Apple is just kind of picking its head up off the mat, but it's that coupled with a little bit of Amazon. Everybody loves Amazon today because both Google and specifically Microsoft had good cloud business. So that's the kind of crap I'm not really reading anymore. But again, I'm fairly aware of that. Okay. So anyway, the Google idea though in here. Okay. Google's expected move is basically $10. It's 9.85. Somebody was just asking that a moment ago. It's 9.85. And look, okay, you don't know how this is going to play. You just don't know. All you can do though is say, and right now, like if the expected move is 9.85 and we're up $15, okay, we have not yet broken and are going to fall. We are literally on the exact threshold, like you're on a teeter-totter right now, where we could explode back. And I'm serious, we could explode right back and be trading 76, or we could come right back down to 66. That's what all the research shows. And everybody goes, well, it's going to do this. You don't know a damn thing. It doesn't even matter if there's sell side activity. There was so much homework and research that went into this. But I did the trade because first of all, those 170s were really, really cheap relative. So I did the trade for the hell of it. I love to roll the dice when I know I can risk 60 cents and the intrinsic value of that trade would be as much as $4. Like, why wouldn't I do that? Somebody goes, well, why wouldn't you, then why wouldn't you buy some calls? I could have bought calls. Why wouldn't you do both? Okay. The statistics don't work out very well for doing both, because then you're buying both sides of the trade and you're like, well, okay, it just doesn't work out well because you're paying double. You're paying 60 cents, for instance, on both sides of the trade. That trade just doesn't seem to work out nearly as well. But I can't stress to you enough that we're literally right now, we are on the threshold between the two deviations, getting pulled in either direction. And that's probably why you're seeing some chopped out trade right here. It's again, if you haven't watched that earnings formula class, okay, that is when I say that in all seriousness, it's one of the classes I put more work in terms of research into that class than I think almost anything that I've ever done. I mean, some of the option classes are pretty easy, but this wasn't just about trading options. This was just about movement. I had to deal with movement after earnings. We'll see though. Again, so we're all clear though. It's still a roll of the dice whether you're going to head higher or lower. Like, I don't know that we're going to head lower. I'm just saying, like, look, if we do, I want to be part of that action, and between those two deviations is the place to be. So it doesn't matter, like, if it's 60 cents, you go, oh, I'm going to get out of $2. Why would you get out of $2? Okay, you got to sit there, you got to wait, you got to take some pain, you got to take some heat. Okay, let the trade pull into there. All right, onward from here. Oh, I was taking a quick glance. So my XLF position is not exactly fermenting well. Okay. I mean, it's working, it's flat, whatever. We have plenty of time in there. We just need to see the world get pummeled again. I like a good pummeling. Now, we have a very interesting trade here. Okay. The interesting trade is Meta. I have a Meta trade on versus the MES. Okay. Don't worry about Tesla. I want to explain you something. The MES, because the market's higher today, the MES trade is actually making like 10%. This was a put that I sold. I sold puts. They're up like 10%. But then the Meta trade is up 100%. Okay. I think I'm going to close this today. I think I'm going to close it. Let me see what I can actually get. 340. That sucks. You guys suck. That's right. You guys. Okay. I don't even know who you guys are, but they suck. And who they are, okay, is you guys. Anyway, I'm just looking at the price of closing my meta trade. Why do I think it sucks? And why is it trading for 340? I'll tell you exactly why. Okay. I have a spread that is 56 days out. 56 days out is kind of a lot. The spread is deep in the money, but it's only trading for 355. And you say, well, why? I'll tell you exactly why. They're screwing me. No, there's too much time left. There's too much extrinsic value in these options. And extrinsic value pisses me off in this particular situation. What I could do, okay, what I could do is I can roll this trade off and close the puts and give myself, like, if you thought that Meta was going to continue to see sell side activity, when I say roll it off, okay, what does rolling the trade off do? You can actually take the trade and move it like, so I could actually roll to a new spread that's further out of the money, do it for $1.72 credit, and close the micros and make, like, 8-10% on micros. Okay. Anyway, onward and upward from there. So what am I going to do? I'm probably just going to close out of the trade profitably. I don't think that some of the people that are newer to Catapult are ready for that. I'm not trying to pick on anybody. I don't think people are necessarily ready for, a roll here, a dash there, okay, a little bit here, a little bit there. All right. This is pretty interesting today, the tape. Okay. I knew the tape would be largely defined by NVIDIA. Okay, but the tape is in NVIDIA right now. NVIDIA is actually gripping hold, even when Google, okay, slippage. There's slippage in Google, but somehow NVIDIA, okay, this is why I'm telling you, whatever you think about this, it doesn't mean anything. The only thing you should think, they're buying calls in here. That's it. It is not about AI. I call it the AI trade, but whatever. It's not about it. Okay. It's hop on board, the AI train, but they should really call this the call buying train, because that's all that's really going on. All right. Anyway, the meta trade in the Catapult, I'm very likely to close and just close it. Okay, 100% gains, all right. Okay, and if you see me, oh, it's 100%. I'm not thrilled about it. I'm not thrilled about it because it's only like 340. Okay, the other thing I might just close the Tesla trade and break even. I didn't pay anything for it. I say I'm breaking even, but I'd actually be closing the Tesla trade, okay, for like that money of $1.22. At that point, I get 120 bucks in my account. I already collected the money. Tesla trade, in my opinion, with 21 days left, I don't know if it could work. Okay, the market would have to go on an incredible bullish run in Tesla, getting above 180. I mean, I could see us coming back to 180, right? And maybe I'll just take the risk in Tesla, close the meta trade, take the risk in Tesla. I have to think long and hard. I got to tell you why I'm thinking about some of these trades, because this volatility, the only thing I have to go on right now in markets is this. Why is volatility not backing off? I've been talking about that for 45 minutes this morning. Okay. I don't have a reason. You have a marketplace that's rallying and everybody's like, yay, we're coming back, yay. But volatility it's down, but it should be down because we just had this immense rally off the bottom over here. I mean, holy crap. Yes, last week we're trading at, let's just round it. Let's just say rounding into 5,000. So we're 100 handles higher. Okay. I mean, we're more than that off some of the deep lows over here. We're about 150 handles higher on the week. Well, that's from the lows of last week, but you're, basically 150 handles higher. The volatility contracts, but take seriously that a 15 VIX is just like, I'm ready to go another round. That's the problem. And that's what traders see in here. Okay. So bonds, can anybody please tell me, why are bonds rallying? Okay. Because I ain't got a freaking clue. I wasn't trying to be, facetious in any way with that one. I'm dead serious. I have no idea why the bonds are rallying. So data comes out today. The data is hot, implying that, oh my gosh, inflation. Okay, inflation is coming back. Okay, I'll give you a real reason of at least what I see. Okay, the market already priced it in. The market knew apparently that PCE data was going to be relatively hot. That's probably why we rallied too. That's why I always say, like, it doesn't matter what the news is. It's already priced in. Okay. There's fear, there's greed, there's love. Okay. It's great. Speaking of which, financials, not financials, the energy sector. I'm looking at financials and talking about energy. The energy sector looks sketchy, like it's actually going to break to the downside. All right, what leads me to believe that? There's a bunch of bids, bunch of offers. There's some big movement in here. So keep your head in the game on this one, because it could start to diminish the ability for the S&Ps to go up anymore today. The other thing in scope is we're outside the expected move, but that line is still well within sight for later today. We'll see how it plays out. This has been a wild week. I mean, for me, in terms of P&L this week, normally when the market rallies, I'm like, ugh, but Meta really helped me out because Don short Meta, okay, and Meta got killed. So Meta is was my saving grace this week. From roughly, let's call it the 500 line to where it presently is, about a $60 move, 300 shares. That's $18,000 to $20,000 of P&L in there, which helped me out and offset the fact that we just rallied and I feel like we're never going to stop. No, I'm actually not along those lines. Okay, I will give you then my take in here, and I said this on Wednesday night's video, and I'm going to say it again. Okay, I have no problem. I'm very comfortable saying we're going to pull back from these levels again. We're going to puke. Okay, and I do believe we're not just going to test through lows. We're going to head back down. Okay, I can't tell you what it's going to look like. Let's call it from 4,900. Okay, now that is my opinion on it. Okay, do I see anything in this tape that points to that? The answer is, well, yes, the volatility points to that. The bonds are still in a very critical area. They're not out of the woods by any stretch of the imagination. I don't necessarily think it takes a catalyst. I'm not worried about Apple earnings. I'm really not worried about Amazon. Okay. I'm not worried about the Fed, because everything that happens right now, okay, again, chocolate covered hand grenades just being chucked into the marketplace. That's what's going on. Okay. News and earnings are catalysts. Okay. News and earnings are catalysts. They are not the driving force. They're not the end all be all. I wanted to show you Snapchat too. Snapchat, forgot to talk about this earlier. The reason I wanted to bring up Snap, they love the stock today, but I'm bringing it up for a very obscure reason. And that is, I see the stock that's up like 20, 24%, which is a lot. It actually was up closer to 30% earlier this morning in pre-market, right? It is making a phenomenal move. The expected move in here was big. It was $2.50. That was yesterday's expected move. Okay. And it's moving kind of what it was anticipated to move, but just time out and hold that thought for a second. Snap typically comes out before Meta when it has its earnings. Had Snap come out before, okay, everybody would have assumed that Meta's earnings were going to be a just knockout, bang up job. I mean, the crazy thing about this, okay, Snap didn't sell off with Meta earnings being a little bit rough. I got more questions than answers on that one. You guys see where I'm going with this? It's almost like Snap knew that Meta earnings were not going to impact it. But clearly, these businesses, Snap has diverged critically from what the business of Meta was. By the way, speaking of Meta, this is actually what is injuring the S&Ps at this point in the Nasdaq. Okay, I say injuring. A little pullback in here starting to be from Meta. Meta seeing some pretty good sell side activity. Okay, right now the teeter totter is starting to lean to the downside. You push it a little bit further, you come under 170, and all of a sudden you're going to be trading like 166. That's how fast it'll happen. Okay, it's a little bit, all of a sudden. Okay, and we'll be at 166, but we'll see. Okay, again, that's still sitting almost halfway home. Or what? Leaning 40 cents on one side of that marketplace, it means crap right now, nothing. Okay, you got nothing. But Meta's definitely taken a little bit of a hit. Meanwhile, people are putting everything they have, okay, in terms of firepower into NVIDIA. Right? I hate, a tape like this, because the only opportunity here maybe a couple of intraday scalps, but the only opportunity really is to close some existing trades. The only thing that I have to close is I'm going to close these MES puts. I'm probably going to close the MetaTrade. Tesla, it's a little bit of a toss up. Looking around a couple of other accounts. Okay. I have no idea what account am I even in right now? Oh, this is another Catapult account. Catapult. Okay, Catapult. So I have an XLF trade that's up like 50% that thing is paid for. I have a QQQ trade that's making 13% and an MES trade that's making 7%. That's the way that an account should look. Okay, because now we're seeing both two-sided trade. That's trade that goes up and down. Okay, the opportunities have really opened up. So Catapult is performing quite nicely. It's playing nicely with others at this point. Okay, onward over here. Everybody good? Okay. Yeah, I wouldn't, Tim was saying ticks are fading here. Tim, I'll be very forthright in saying, I mean, your ticks are going to be useless right now. The ticks could be, negative 1,000. It's not going to make a difference. Okay. Why? Because the only thing that's going to matter is the big tech stocks. You cannot see sell side activity here. You can't. Okay. Unless you get Google seeing selling. Okay. Which would then, in fact, pull NVIDIA down. That's it. Okay. That is your trading session, sir. Okay. And Microsoft is bid back. It would not make a bit of difference because Microsoft is 3 trillion. Google, just so we're all clear, okay, where's Google in terms of the trillionaires, okay, is 2 trillion. So you have Microsoft, 3 trillion. It's, well, if you want to look at Microsoft, it's just over 3 trillion plus 2 trillion, you're at 5 trillion. Throw an NVIDIA in there, it's another 2 trillion, okay? You have $7 trillion of market cap, and that's trillion with a T. You have $7 trillion of market cap. Is there anything that matters other than $7 trillion of market cap? And the answer to you is unequivocally not. By the way, you should probably throw Amazon in there too, which isn't good for another, let's call it just round it to 2 trillion. Okay. Now you have $9 trillion of market cap, and you understand why the S&Ps are up some 55 because nothing else is performing. I mean, the financials are basically flat. The energy sector is actually down. As I said to you guys earlier, the energy sector looked a little sketchy to me, and that it is. But nothing matters other than, let's just round it and go for a cool $10 trillion. Those underlyings, okay, are more than everything else basically combined in the S&P 500. And they are. You can add up, how many companies can you add up in the S&P 500 that would even equal the market capitalization of Microsoft, which is $3 trillion? And the answer is probably close to 400 of the 500 companies in the S&P 500. So 400 of them added up. That's why I'm going to tell you two things. Number one, the ticks, I wouldn't say they mean squat today, and the advanced decline line doesn't mean much. The advanced decline line getting better today, I don't even think is bullish. Okay. On the contrary, okay, because we might be seeing a capital rotation. If it's capital rotation day, right, the better the advanced decline line gets, it means they might be rotating out of tech. So, which we're not seeing that yet, but it's quite the little conversation piece. All right, are we I'm okay to go? Well, I wish there was something else to trade in here, but I have Jeff Bierman coming on anyway in a few minutes. Just looking at Costco. By the way, I'm bringing up Costco. It's just kind of bouncing around. And whoops, sorry about that. It's just bouncing around inside this range. I was waiting for it to kind of pick its head up to see if it could roll back over. I'm not worried about its earnings. Its earnings are pretty far out in time. So Costco, once again, could be opportunistic for a trade. The only thing I have going on right now in the in-out spread, is this XLF trade. That's it. Okay. XLF did exactly what we thought it would. It came up and it's starting to come off, but not enough. It's not enough, but the day is young. Okay. Again, I'm very suspect of this marketplace. Very suspect. If you haven't picked up on that. Okay. Very bothered. Don's getting angry. Volatility doesn't back off with a move up. Like when a market's up 1%, like vol could be crushed by 5 to 6%, and no one would think twice. Like the VIX could be down at least a full point. No one would think twice. That's what it should be. Why is it not dropping? Drop your damn VIX. Okay, drop, and it's not. Now you can look at VVIX, but I've told you guys time and again, VVIX is not effective after we've seen, like once you've seen smoke, VVIX takes off to the upside. But after there's a little bit of fire, VVIX will descend and it's kind of taken out of the equation. But even like short-term volatility, long-term volatility, none of them are backing off. Maybe it's the earnings next week. Maybe it's the Fed. Okay, there's a lot of stuff coming out. But anyway, S&Ps right now just kind of holding their own. So I do have to turn it over to the professor. Jeff Bierman's going to be coming on here in just a couple of moments. And when he does, and you will know that Jeff Bierman is probably going to be a little hopped up today. Okay, because his his MACD is not rolling over. We making fun of Jeff? Yeah, a little bit. Okay, got your MACD right here, Jeff. Anyway, his topic of conversation today is I have no idea. Okay, he yaps and Skype so much I can't even find the damn thing. Rush to judgment. Volatility indicator game changers. Volatility indicator game changers. Game changer. Okay, I'll tell you the game changer is be right here. Let's see if some selling comes into Google today, because right now it's teeter-tottering, people. Okay, I suspect could be an opportunity here in NVIDIA as well. Forget this crap. It's way too expensive. There's no chance in hell I'm doing that. For a 50 delta option paying $7, I don't even care if it can move $30. I'm just not, I don't mind taking a shot, but I'm not taking a shot with like $700. That's not right. But look, if NVIDIA backed off, like if you wanted to take a shot in NVIDIA today, okay, I've already taken my shot kind of in tech because I bought these puts in Google. But if you wanted to really take a shot in NVIDIA today, I would say you buy a put like here in the Qs. And I'm actually not going to do it because I already took my shot in Google. I think that would be kind of duplicating, okay, the same trade. Speaking of duplicating the same trade, okay, I do enjoy seeing Meta get the crap beaten out of it. By the way, I got a thing for this stock, and it is not a positive thing. I don't like this piece of crap. Okay, I've never liked this piece of crap. Okay, have you guys seen the metaverse? By the way, I actually did. I watched. There's a webcast, not a webcast. It was actually like a podcast. Webcast, podcast. The hell's the difference? Okay. Oh, I know. The podcast is only audio, except this one also had video. So it's a webcast. It was Lex Friedman with Zuckerberg on there, and they were actually in the metaverse meeting. Okay, it looked pretty cool. It did, but it's not in production yet. Okay. And I'm not about wearing this ridiculous friggin' headset on my head. We don't have one of those. I should get one just to play around with it. Okay. Because I can do that, okay. Because I'm a giant child. The last thing I'll leave you with here is the S&Ps are starting to back off. Okay. And by the way, I buy toys. And I'm like, oh, it's for the kids. We bought ourselves like a Nintendo, that has every Nintendo game from like the 1980s and 90s. Okay. I bought that for the kids. And they're like, how come you always want to play Mike Tyson's Punch Out? I'm like, because I can beat you in that. I'm going to turn it over to Jeff Bierman here momentarily. Keep an eye on the Google trade. Okay. Keep an eye on the Google trade. If it comes back anywhere in and around the 166 handle, get out. That's it. That's what you do. You're like, what's the exit strategy? There's no percentage return. Get out when the stock's at 166. Okay. At that point, chicken's done. Now we're leaning a little bit on that. There's some sell side activity in Meta. Right. Question is there going to be any selling coming on here in Microsoft? Not so much. Okay. But Google is interesting. Google comes down. It could really spark a fire inside of NVIDIA. Stay tuned. Professor Jeff Bierman is coming on here.